point is you need to get Bitcoin ingrained in that type of community. Why? It's the solution. Most of these people don't realize it. It's their life raft. They need Bitcoin because they're so myopic. They have no clue what's coming down the pike for them. So yeah, great work. Maybe I'll just say I don't have a job, which is good because I'm busier than I ever have been in my life, trying to help educate the world on the greatest asymmetric investment opportunity I've ever seen. I have over 3 decades of experience managing money, managing risk to be specific, hedge funds, working on the buy side of the street, so the hedge funds. And I also started my career on the sell side, where I worked on Wall Street and Bay Street as a credit focused risk manager. So I got earned my stripes in the emerging junk bond market in Canada in the late 1990s, early 2000s. And it's for that reason that I draw parallels to the Bitcoin adoption amongst asset managers. I can look back on my career trying to, and successfully, let's call it the equivalent of orange pilling, but it was high yield bonding Canadian asset managers, making them understand the benefits of a diversified portfolio of credit risk, particularly since they frequently owned the equity of said high yield company, but did not own the bonds because the bonds are too risky. Nonetheless, it was an education process 25 years ago. Now every single Canadian asset manager has a silo for high yield debt. I expect the same thing to happen over the next 10 years for digital assets in general, but specifically for Bitcoins. There was a time when I did know command language, MS-DOS programming, because that's what you had to do when you first got a personal computer. Because I grew up with a rotary dial phone. Point being, I graduated from university without ever having used a personal computer because they didn't exist. All right. And then when I did a graduate degree, they were just right on the edge. And all of this is to say, look, I can't tell you from a technological side the bullishness, because you did a great job. What I'm going to do is come at it from the other side and say, having lived in the world of finance for 30 years, 30 years ago, nobody ever talked about fiat. And now, and I'm not trying to say this is my reason to be bullish. Yeah, I can see it, I can feel it, but it doesn't, I can't relate to it that well because I'm not I'm a noob in the technological world, the true technological world. When I have a problem with my iPhone, I don't try and fix it. I give it to my kids and say, can you please teach me how to turn this thing on or off properly? But what I do know is that over a period of so long, where fiat was never a word in the financial markets, now becoming a word that a lot of people are questioning and understand it. So I'm just going to draw a parallel from a finance perspective. The technology that you're referring to, I see happening with questioning the fiat system, because fiat 10 years ago wasn't really a word, and now even young kids are understanding fiat. So technology wise, my technological observation is purely subjective, but it's a questioning of the current system, the technology of the current financial system. I add 0 to the technological side of Bitcoin, but I do see it in a different lens. This is a shout out to the UK collective, because I was on their podcast a couple of times, and let's be honest, their podcast was a crypto podcast when it started, and it's a shitcoin. And the fellows, well, yeah, they did. But now here's the truth. I mean, I only focused on Bitcoin on their podcast, and when they announced the conference to begin with, some of the more toxic Bitcoiners, who I love, by the way, came at them hard. What's this? You guys are a shitcoin conference. Don't attend this. And my first opinion, or defense was, look, I'll go into anybody's barn and fight for Bitcoin. It doesn't have to be a Bitcoin only conference, but these guys have assured us, and when I say us, it was Jeff Booth and myself, both of us who would go, doesn't matter, but we would like it to be more Bitcoin focused. And these guys say, look, we get it. We went down shitcoin alley and we realized why it's Bitcoin, not crypto. So traded financial markets my entire life. I've actually never been to the UK. So look, they went down the path, these guys that are doing the Bitcoin conference UK. And they've rebranded themselves, and I believe them to be honest. They're not out to make money on this. They're out to educate, and that's the key. Education is always key. So I'll support them. I supported them to begin with because, as I said, I'll go into anybody's environment to defend and pitch Bitcoin. Contagious. When you meet people that want to expand the discussion outside of the normal echo chambers. Education, people, it's that simple. And if you're not aware of the passion that's available in the Bitcoin community, you're in for a shock, because whether it's Bitcoin Lebowski or guys that approach it a little differently. So let's say like Jeff Booth, who can basically attack you without you even understanding how mortally wounded you are when you talk with Jeff Booth, right? So like it's all cool. It's a learning process. So Joe, I'm looking forward to that. I will support the Bitcoin UK effort. Very happy to see it. It's a financial center of the universe. One of the 4 or 5 true financial centers of the universe, London and then the UK, of course, New York City, and then we'll debate over what the other ones are. But the point is, you need to get Bitcoin ingrained in that type of community. Why? It's the solution. Most of these people don't realize it. It's their life raft. They need Bitcoin because they're so myopic. They have no clue what's coming down the pike for them. So yeah, great work. What I'm doing to try and help my children to leave the world a better place than the world I came into. And so far it's not. So, I'm bullish because the kids it'll be a natural progression. Much like the iPhone for children now is just an extension of their body. For me, it's foreign because, I hate to bring it up, but yeah, I grew up with that rotary dial phone. So anyway, this is for the kids. Please learn math. This has been a historic rout in global bond markets where people are learning the risks of owning a bond for the first time in over 40 years. Okay. And so that's why I'm bullish on Bitcoin, because I'm so darn bearish on people who don't understand all the risks that are intrinsic in various investment opportunities. So for the longest time, just to simplify it for the viewers, equities and bonds were inversely correlated because when there was a sell-off in equities, people traditionally ran for the safety, I'll use air quotes, the safety of bonds. Treasuries have now become a risk asset. It's unbelievable, but I need to take it one step further. Not just a risk asset because of inflation concerns. They have become a risk asset because of credit risk, potentially default. I'm not calling for the default of the USA just yet, but the math is absolutely horrendous. So there's credit risk in treasuries now that the market's figuring out. And the bigger one is liquidity risk, okay?
Yes.
Bank of America came out with a research report on the resiliency of the US Treasury market. And I believe it to be one of the most concerning reports I've ever read. And it's going to fly under the radar of 99% of the people out there. But it basically is predicting the days when bid offer trading spreads in treasuries widen so much that the market doesn't function properly. And you can't get proper, assuming the non-manipulation of treasury prices, you can't get proper signals because the bid offer spread is too wide. And all of a sudden you're having discount rates that can change by 50 basis points just because of the illiquidity of this supposed risk-free pricing asset in the world. Every single risk asset in the world is set off of the US Treasury yield curve. If you don't understand that, just trust someone who spent their entire careers in the bond markets. How do you formulate an appropriate discount rate to calculate the expected returns on free cash flows? It's so difficult if you're playing around with a 50 basis point bid offer spread on a 2-year bond. Okay. It is so important to remember now that we have people that are getting destroyed in their safe haven, risk balancing asset class. The global bond index is down double digits. Okay. The global bond index has never been down more than 2% on an annual basis in the last 30 years. This year, it's down 14%. And it is getting destroyed. Assume that global debt mimics the global bond market and the total debt is down 10% on a mark-to-market basis. That's $40 trillion of global wealth that has been marked down in price because of an increase in interest rates at the central bank shenanigan factory. Okay, these people finally got off of negative interest rates in Europe and they're wondering, oh my goodness, how is this happening? Guess why it's happening, you knuckleheads? Because you manipulated the price of capital or the discount rate for capital into negative territory. It's shameful, but true. So bonds are now a risk asset and people are going to need to find assets that insure against other assets losing their value. As you know, I've said for a long time, from a credit perspective, I believe Bitcoin to be default protection on a basket of fiat currencies.